Did you know that SCHD, a dividend-focused ETF, has outperformed nearly 90% of actively managed funds over the past decade? And it's done this with a strategy many investors overlook. Stick around to learn what makes SCHD a powerhouse for long-term wealth. Today, we are digging into SCHD, Schwab US Dividend Equity ETF, and why it's so popular among long-term investors. SCHD combines strong dividend payouts and growth potential in one low-cost package, making it a standout choice for anyone focused on building wealth over time. Dividend investing often gets a bad rap, especially among those looking for high growth. Many people think that dividend funds are just for retirees, or they believe dividends come at the cost of growth. But in reality, a well-chosen dividend strategy can help investors build wealth by providing steady income while allowing them to reinvest and grow. On top of that, some investors think dividend-focused investments don't offer enough excitement or that they can't compete with high-growth tech funds. But SCHD challenges those assumptions by delivering both solid growth and dependable income, which is why it's gaining popularity across all age groups. And when you look at its top holdings, companies like Pfizer, Coca-Cola, Merck, and PepsiCo, you see durable, cash-rich companies that prioritize rewarding shareholders with consistent dividend. Each of these companies is positioned to thrive through various market cycles, making SCHD an increasingly popular choice, especially for young investors interested in stability and growth. So what exactly sets SCHD apart? First, it has an impressive dividend yield, currently around 3.46%, which is higher than most growth ETFs and more than double the current yield of the S&P 500, which hovers around 1.5%. That's a compelling reason to add SCHD to your portfolio. But unlike many other dividend-focused funds, SCHD doesn't just chase yields. It uses a strict quality screening approach to select top-tier, financially strong companies that are more likely to grow and keep paying dividends. Let's look at the historical performance. Since its inception, SCHD has consistently provided competitive returns, often outperforming traditional income funds and even some popular broad market ETFs. As of September 2024, SCHD's 3-year annualized return is 8.2%. Its 5-year return is 13.53%, and its 10-year return is 11.93%. What makes this even better is SCHD's expense ratio of just 0.06%, super low. That's 94% lower than the average equity mutual fund, which means that with $1,000 invested, you are paying only 60 cents in fees annually. Over decades, these savings on fees can add up to significant savings and keep more of your money working for you. And here is a key point. SCHD's portfolio focuses on companies with high dividend, but also strict quality filters, targeting businesses with financial strength, consistent dividend growth, and proven management efficiency. This selection criteria has helped shield the fund from significant downturns and has contributed to its remarkable resilience during bear markets. SCHD's diversification across sectors like financial services, energy, consumer cyclicals, and tech ensures it's not overly reliant on one industry for returns. Here's where SCHD really stands out as a long-term wealth-building tool. Imagine investing in companies that pay reliable dividends and have a strong track record of increasing those payments over time. With SCHD's robust selection process, you're not just getting reliable cash flow, you're benefiting from high-quality companies that are built to grow, even in volatile markets. Some of the world's greatest investors, like Warren Buffett, have long praised the power of reinvesting dividends. And SCHD offers a great way to tap into that by providing exposure to blue-chip companies with the financial stability to keep delivering. Companies like PepsiCo and Coca-Cola in the fund have increased their dividend for decades. while others in the fund, like Merck, have solidified their positions in industries with stable demand. With SCHD, you get the opportunity to build wealth through the compounding effect of dividend reinvestment. When dividends are reinvested over years or even decades, they allow wealth to grow exponentially, providing returns on both the principal and the dividend accumulated. So with SCHD, you're not only receiving steady dividend checks, you are gaining access to a disciplined, high-focus approach that can compound and build your wealth year after year. So to wrap it up, SCHD isn't your typical dividend fund. It's a growth machine with a disciplined approach, low cost, and a strong historical track record. For anyone looking to build long-term wealth, SCHD offers stability, growth potential, and a steady income stream, making it a compelling choice compared to other funds. If you're interested in growing your portfolio with smart, long-term investments like SCHD, let us know in the comments below. And don't forget to check out our video on the top dividend stocks for even more ideas. Hit that like button, subscribe, and until next time, stay financially savvy. See you in the next one.